Alright guys, I want to make this video because I found it profitable in the market, of trading the market with it. So I want to talk about trading with. You guys know that my last video I talk about the RSI, how to find the RSI hidden divergence. But now what I'm going to be talking about is the EMA and the RSI, how to combine the two to get a better entry, and what to look up out to before you take your entry to know whether if that trade is going to be a profitable trade or not. So guys, what I'm going to be talking about here is just a simple thing. Very simple. Very simple. It has been happening in the market all the time. It has been happening. I took my time and I studied it, and I find out that it's a profitable way of trading the market. Now I have if you look at the market, I have EMA, the three EMA lines, the 200, the 50, and the 20 EMA. Now I use these three EMA perfectly well, and how do I use it is what I'm going to explain to you guys now. So firstly, what I'm going to be explaining here now is how to take a trade with the EMA 20 and 50 and the 200 plus the RSI. Now what am I saying here? If you look at this trade now, when I opened my trade on Friday last week, I took this trade. I saw this setup on the market. So what am I calling setup here? I know some of you will be confused. Now firstly, what I'm calling setup here is the first thing first, what you have to see before you start looking for your setup is, first thing first, you have to see the 20 EMA and the 50 EMA crossing each other. When this thing happens, now this is a very important aspect of what I'm about to explain to you guys now. When this thing first happens, what are we looking at? We are looking at when our market is going to returning back to 50 EMA. If 20 EMA crosses 50 EMA and the market pull back to 50 EMA, what are we looking at here? I want you guys to look at the RSI. When 20 EMA crosses 20 EMA when 20 EMA, as you guys can see, 20 EMA cross the 50 EMA here, and the market pulls back down. So where are we going to take our trade? We are taking our trade is, on my last video I said that when we are looking for hidden divergence, I don't want the RSI to go above 60 if you are looking for bearish. If you are looking for bearish, I don't want it to go below 40 again. I want you to maintain the middle RSI. Now this is a different case. So when we are looking for a trend with the EMA to enter a strong trend that will pull the market down. So what we are looking at here is this. First thing first is that we have to identify the crossover of the 20 EMA. That is the first thing. Then the second thing is for us to allow the market to pull back and the RSI to pull back to 60. If you are looking for bearish, we are looking for bearish now. This is the bearish example. So what we are looking for is for the market to pull back to RSI 60. So this is the RSI 60. Market pull back to the RSI 60. Our arrow is pointing at it. So market pull back to RSI 60. Why is it dancing like this? Okay, pull back to RSI 60, and then the market also pull back. Now, listen very careful, guys. When we have identified that the RSI has pulled back to RSI from oversold to RSI 60, make sure the market goes oversold on the RSI when the 60, the 20 and the 50 crossover, and then you see that RSI has gone over to oversold or overbought. Then the RSI pulls back to 60 line. This is where we are looking for to start looking for an opportunity in the market. This is where opportunity comes in the market. Now, another secret here again, when this thing happens, now I don't want the 20 EMA and the 50 EMA to cross each other. When this market, when RSI pulls to reaches 60 line, I don't want the two lines to cross each other. So if you guys are looking very well here, you will see that my 50 EMA and 20 EMA did not cross themselves. They keep on maintaining that open trend. Is open market. This market, the bearish movement is still open. It's still open to me. It's still open to me. But if should any case 20 EMA crosses 50 EMA, I won't say you should cut off on this trade. Do you know why? Why I will not say you should cut off is because the 50 EMA has already crossed the 200 EMA. Now we have the second option in this trade, and which I will explain to you guys with another example. Now let me not confuse you guys. Let me remove the 200 EMA first for this example that we are going to show. Now, as you guys can see, we're now left with only the 50 EMA and the 20 EMA. And now our market has already set up, the pullback has reached 60 EMA, 60 RSI line. Sorry guys, 60 RSI line. Now, this is where the whole thing will now happen. This is where the whole thing will now play out for us. So what are we going to do here? What are we now looking at? Now, I always suggest to you guys to wait. When you see this setup, I want you guys, if you guys remember what I said before in my previous video, that each time the RSI crosses 60 or 49, the trend begins from there. So I want you guys to see, now that we have reached 60 and the 50 RSI and the 50 EMA and 20 EMA is still open. So what I want you guys to look at here, how will we now get into this trade? How am I going to get into this trade? First of all, the first leg that crossed the 60 line is this one, and it pulls back below 60 EMA, like what I said before. It pulls back below 60 EMA and pulls up again and give us a close above this market. Now what happens here is that we now have our low in the market, and which is this low, this one. Now they come back to first to tap on it and go up again and break this. So this is our entry point. You guys should always remember this. I'm giving you guys this secret free of charge. So when you look at it now, you see this is the first low in the market, like what I explained to you guys before. So this is our first low, and this is where we are protecting. Anytime market break and closes this low, we enter the market. So this is what we are watching. And now if you look very very well, there is what I saw I'm looking at here, and which is M. This is M. So if you look at this, you see our M. Let me see whether if I can draw this very well for you guys to see. It's not giving me. Let me look for a better. Let me look for a better something to do. Let me look for a better something to draw this out. The brush line, okay. So okay, pencil to this one, okay. Okay guys, sorry for the. So if you look at it, you see the first leg crosses above the 60 EMA, comes down and cross again, and then comes down again. So if you look very well, you will see the M forming, M doubly forming. So this low here is what, this is our low here. So this is the point of our entry. So sorry guys, so this is the point of our entry. So when the market closes below this M line, which is this, so you guys should just look at it and see how it tallies with. Let me put an arrow line here for you guys to see how it tallies. The M. So you see M, it tallies very well. So that is how we are going to be trading with EMA and RSI 60. I hope you guys understand this. So once this M is broken, you enter your trade here and run it down, maybe to whatever you want to, maybe 1 to 2, more than 1 to 3, or you can hold it till you see 50 EMA closing again. Thank you guys. I hope you guys understand this very well, and I will show you guys. Okay, sorry guys, let me show you the example of trading with EMA 200 and the EMA 50. The example of that, let me see where I have something. Okay, I think I have that. I took that trade on the New Zealand Japanese the other day. I think I took the trade. Yes, I took the trade on New Zealand Japanese. So let me show you guys where what I was talking of happened. So as you guys can see, crossover of 50 EMA, 50 and 20 EMA, and crossover of 2 EMA 250 EMA, and then market pulling back to RSI, pulling back to 60 line, and then 20 and 50 EMA crossing each other, you guys can see now. So that is the example. So what I want you guys to understand here is that even though that the 20 EMA and the 50 EMA did not keep open, but now the another important thing is that the 50, when the RSI reaches the 16 line, what I want you guys to understand is that the 50 EMA and 200 EMA is still open for the market to go down. Now, how do you now enter this market? You look for the same thing I explained before. The first leg that crosses, cross above 60, comes down. Another leg cross above 60 again and comes down. Another leg cross again and comes down. So this leg is where we are monitoring. So this is our entry leg. So whatever, any candle, the candle that closes below this next, so this one snaps at it. So this becomes our new low. So once the market closes, pull back again, as you guys can see, closes below 40 and pull back, and then we'll enter the trade, and then we'll run the trade down. I don't know if you guys are understanding. So once closes, run the trade down, your stop loss should be above this high, and then your 1-to-1 has already snapped out. You can go for 1-to-2 or so, or thereabout. 1-to-2 is going to hit. I always assure you guys it's going to hit. It's a live trade. I'm on this trade as well. I will show you guys so you won't believe what I'm saying. I'm still on that trade. I think I took that trade on a demo account this morning. Yes, I took it on a demo account. Yes, I just took the trade on the demo account. You guys can see that. So thank you very much.